Hello, my name is Junganelli, and today we are going to be joining a Zoom class. So make sure you subscribe to the channel.
Look at property income. Now, property income is enshrined in Section 20 of the Income Tax Act. Section 20. And Section 20 looks at property to mean what property income looks at it to mean any of the following. One, any dividends, interest, annuity, natural resource payments, that one called focus. Please, can you shut your gadget down? Guys, I have less time today, and I don't want to waste time. So please mute your mics. You inconvenience me. So you're saying that property income, as per that Income Tax Act, it's not my words, it's what the Act defines it as. Any dividends, interest, annuity, natural resource payments, rents, royalties, and any other payments derived by a person from provision or use or exploitation of property. So the key thing is whatever benefit you derive, provided you derive it while using or exploiting property, while using property or holding a given property, and you derive any benefit, that benefit will tantamount into property income. And therefore, it's going to be taxed under property income sections. Any benefit you derive as a result of holding a given property will tantamount to property income and to be taxed under that section 20. Of course, it's not only section 20, we are going to see later with section 20 sends us to section 120, 122, and equally we also reference it with section 115. Section 115 is withholding tax at the source. So in most cases, you find that property income guys, they suffer withholding. They are taxed under withholding tax regime. We are going to see how you go about them. Now, I want to explain before I go to the details or to look at other components of property income. If we talk of dividends, guys, here it implies you bought shares and you invested in a given company. And therefore, as a result of that investment, you you're entitled to dividend payment by that company. And as a result of that dividend payment, now dividend payment is an income, but the Act calls it property. So it implies you investing, your investment in that company, say in MTN, it can be part professional accountancy, it can be maybe Nile Brothers, it can be Meme, it can be Ghana Clays, but that investment qualifies to be your property. That is how the Act looks at. But you are earning an income or a benefit called a dividend as a result of your investment in that company. So that payment now leads to property income, which is now dividends. 2, interest. Interest, you invested either with banks or it could be government securities. Invested with the bank or government securities. How do I mean government securities? We have the likes of treasury bills, the likes of treasury bonds. So if you are making an investment and you go invest in government paper, like treasury bills, bonds, or you fix your investments with the bank and you earn interest. That interest income you are earning on your treasury bills, on your investment, on your fixed deposit are looked at, guys, as interest income, and therefore it suffers tax under property income tax regime, which you're going to see how we tax it. But the point is, it becomes property income. Annuity, it's like a natural, it's a payment, but which occurs on regular intervals. It occurs on regular intervals, but the point is also it will be taxed. Natural resource, if you invested like in like those people who, if you have like any mining, if you have like a clay and you are earning income from there in anything which is of a natural resource, but not agriculture, if they pay you as a result of you holding that, maybe sometimes people are buying birombe. So you guys, what you earn, if you are can tap it, you are supposed to pay tax on it. Rent, realities. Rent, we look at rent is of two categories, and I don't want you to get confused. This one, guys, let me highlight it. It's a tricky one because students normally they get lost here. Rents we are looking at as under property income. All of them are property, but they are of two categories. We have rental income on immovable property. Rental income on immovable property, and here we have land and buildings. Land and buildings, immovable. Then we have other rents, like I can rent your car and I pay you. I rent your machine, I pay you. I use any asset of yours. It's your property in short, but I use it and I am paying you rental. Rents or any payments. That also is property income. But how is that rent different from the one of land and building? The one of land and building, it's on immovable property and it's a separate tax. Section 5 of the Income Tax Act calls it a separate tax, and therefore it should be taxed separately. So please, you note, for the case of rent, it should be taxed separately. It should not be aggregated. In actual sense, if I can read for you, Section 5, subsection 3, it says that tax imposed under this section on a person is separate from the tax imposed under Section 4. Remember, Section 4, we looked at imposition of tax. And any tax, we look at, you derive chargeable income, whereby you get your gross income, less allowable deductions, then you get chargeable income. And on chargeable income, we apply a rate. That's what Section 4 says. Now, and remember, a gross income, when you go back to section, that is 17, looks at the composition of property income, the composition of business income, composition of employment income, the total amount of all that, less other than exempt income, is what we look at as gross income. Now, Section 5 tells us, other than this tax, other than what we saw in Section 4, which is that gross income, which you know should be taxed separately. So if you have rent, if I'm to summarize this, am I doing it right? Guys, rental income from immovable. Movable, I think it's double M. Movable property. I mean, e.g. land and maybe buildings. Land and buildings. Guys, should be taxed. Those things you note them because they are going to come on your way, taxed separately. And I told you already in the class we reviewed that it has its own amendments, and we have taxation of rental income. We have for business, note. We have business taxpayers and individuals. So you need to learn how to deal with rental income taxation for both business and individuals. We are going to see how we deal with that, because we are going to do computations, and by the way, expect that in your final exam. Taxation of rental income. To be very honest with you, the current thing has just been amended. So once we fully cover it, expect it. Now, the other rent, this is rental income from immovable property. Now we also have rental income from other property. Other than immovable property. Now this one, guys, this is taxed under withholding tax. It's taxed under withholding tax regime. But we've said the one of rental income from immovable, if you have land, building, apartments, all those, and you're renting them out, guys, it is taxed separately. You don't aggregate it with any other tax. You declare it even in URA separately when you are filing returns. I hope we are okay. So if I go back, any dividend, interest, annuity, natural resource payment, rent, royalties, any other payment derived by a person from use or exploitation of property. I think I've not explained royalties. Royalties is like assuming you want to open up a branch in people be complaining to Pat that Pat we are in a town and in Kampala, and they also want to go in their areas that we can teach them the professional accountants, CPA and SCCA. But we tell them businesses there have proven not to be, we've tried, but they are not viable. You pay a lot of cost and less revenue collected there. So we always inform students that those who want to study with Pat, you must attend from we have one on the branch, and it's the only head office, Kampala. Now, but somebody can say, want to partner with us in the context or the name of Pat, and he stays in Mbarara. He opens up a branch, his own school, but because Pat has a goodwill and wants to fringe on the goodwill of Pat and teaches under Pat context, but in actual sense, we are not the ones. So we may need to sit down and agree on how do we do business, but he must pay us for using our name, which is that brand. So our brand is our property now. The payments he makes to us is property income. This is what we mean as royalties. I'll give you another case of like Central Bottling Company in Uganda. It produces, it's a license to produce Coca-Cola products. It must pay for that trip. It pays royalty to be allowed to produce Coca-Cola products. It's not theirs. When you look at companies like Vivo Energy, it trades under the name Shell, but we know very well Shell left the Ugandan market. But because of the goodwill and the brand, it wants to continue to be known as Shell. So it must pay Shell for the name it uses. So all those are royalties, and it's a property of Shell as a company. I hope you understand royalties, guys. Now, so how do we, guys, all those, any other property income other than rental income from immovable property, it is taxed under withholding tax arrangement. Guys, any other property income other than rental income from land and buildings, which is immovable property, it is taxed under withholding tax regime. So you're going to see withholding tax, but as we look at withholding tax, just know we are looking at how do we tax property income. Right, I hope you get that. If I'm to continue in B, a value of any gift derived by a person in connection with provision or use expression of property, any value, any benefit, total amount of any contribution made to a retirement fund for a year of income by a tax-exempt employer. That is a key one. A tax-exempt employer who is exempted as per Section 21, and even Section 2B, Section 2BB of the Income Tax Act provides those incomes that are exempt and those entities that are exempt. As a result, their incomes are exempt. But where they make any contribution to the retirement fund, like NSSF, their own contribution for their investments, or they have now like a contribution, like we have RBS at MOBS, but assuming that entity is exempt, they will tax that income under withholding. And then we have derived by a person, including winnings derived from sports betting and pool betting, but does not include any other amount, which is business employment or exempt. That thing was brought in 2014. So when they amended, any income from betting and pool, whether of pool, whether whatever winnings you know of betting, as you make a stake and you win, those bettings is property income. Before they pay you your money, they must withhold. They withhold. We are going to see how much they withhold. But it is also property income. NB, you're saying amount included in property income under Section 21A, which you've just seen, that is all that is Section 1A, should retain its character in terms of dividend, annuity, interest, natural resource payment, rent royalties. For the purpose of this section, after referring to income, it must be property. It remains as a property income, guys. And therefore, the only exception to that, I've told you, it is rent, which is for land and building, which you call rental income from immovable property. And Section 5 of the Income Tax Act says that it should be taxed what? Separately. Okay. Natural resource payment, they are trying to go into the details of what that is. I'm going to request you go through those. I explained. Royalties, what royalties mean, it is there for you. I explained. Go through those. They are giving examples of formula, like what the example I gave you for essentially bottling. So you go through them and look at the different examples. Imparting knowledge, any scientific, technical, industrial, commercial knowledge for information. Example I gave you, like the one of PAT. If any company wants to operate under PAT is what? Trademark or name. Okay. Annuity I explained. Dividends, I already explained what dividends is. Any income, you go through, read those. Now rental income. Rental income means any payment, including premium, like amount made on consideration for use or occupying, a right to use or occupy land or buildings. Now, this is rental income, guys, from immovable property. I've told you, if I have your car and rent it out, and you earn that rental income you've earned, is property income. And that one is not the rent we are looking at here. Okay. Now, guys, I'm now covering rental income, and take note of this. It's a new thing, it has changed. I want to cover it for your understanding. I've told you, this one I assure it will be there in a final exam. So please take note on how it is done. Let me make it, I increase the font here because I want to show you something. Rental income immovable. Property. In bracket, we have land and buildings. Okay. Now we have two contexts, guys, and I'm going to summarize it in this way. You have a business and you are renting it out. Because of you renting, you earn income. Now that income, in regards to Section 5 of the Income Tax Act, the standards say, the Act say it should be taxed separately from any other income and should not be aggregated. So if you have business income, remember we said gross income is the total amount of business income, employment income, and property income, but does not include exempt income. So you don't include exempt income, but equally, if you have rental income as your business, it's business, but since it is rent, you do it separately. It is taxed separately, and therefore you file it separately from all other forms of the others. You can aggregate them, but you can't aggregate land with rent from land and buildings. So now, how do we do it? A, for business. Let me start with for individuals. As per the current act, guys, you may not find these in your reader. Please, here I request you put them down. For individuals, actually, let me call it taxation of rental income for individuals. I hope those who don't want to attend class, they will miss this. Now, guys, for individuals, before, I'm going to show you before and now details. Before, now, what we do, and I expect you to apply now or current one. We need to look at gross rental. We look at gross rental income. What do I mean gross rental income? The total of all your rental incomes. If you have apartments, if you have lands in different areas, could have made investments maybe in Koto, in Kono where I stay, could have made investments maybe in China Mugaka, etc. You aggregate all your total rental income. Now I'm going to assume my rental income was 200 million. It's 200 million before, and I want to show you how they would tax it. Now, rental income before, and equally, you also have the same 200 million now. But how do they differ before? I'm not interested in the one of before, but I want to show you later so that you note. While reading, I know there are those who read all the information. You'll mess up with this as you read. What do you do on that gross rental income? You less threshold. Threshold, I don't know the spelling. Threshold, and the threshold was per month. Per month it was 200, it's 235. And per year it goes to 2.8 something, or 280, sort of that. Somebody can compute for me, calculate and compute me for me. What is it per year? 235,000 times 12. You get 2.2820.
2,820,000.
Good. That's it. Still equally, would say 2,820. That is the threshold which is given. You less it. Less the threshold of 2.8. That is annual. I'm assuming this is for a year. But if it is for a month, you would remove 235. Do you still recall unemployment income? We remove 235. Remember, these are individuals. They are treated as if they are employees. Okay, we use the same threshold if you are individual. 235 for monthly and annual, it's 2.820. Now, what do we get, guys? If you subtract 200 million minus that 2, you get around, I think, 100 and, is it 90? I don't know. Let me get a calculator.
197, 180.
197 million, 180,000.
You get now what I'm going to get here, guys, is the chargeable income. Chargeable income. Chargeable income, in all cases, you'll get 197. Guys, hope you are copying this for your practice purposes, guide you. And equally, I also get 197. Why? You need to know how to tax rental. There are very many who are in real estate, and I know some of you are planning to do them, and others are already doing that business. Common business in Uganda. So after getting that, we now remember we said we apply on the chargeable income, we apply a rate. Now we come and say tax rate. The tax rate before, guys, was before it was 20%. If you go check section 5, and currently this rate is 12%. 12%. So we now get tax payable. What is tax payable, guys? Now,
For now, it's 23 million.
I'm getting 39,436,000.
Yeah.
Was before. This would be the tax payable. And now it is, somebody is giving me a figure. 20?
It's 23 million.
23 million.
661,000.
661.
661. 600.
600, eh? Like that?
Yes.
So this is what would be tax payable. I hope that is okay with you. Now, this is how we tax currently. You less the short threshold, we tax at 12%. So they reduce slightly on the tax that should be paid by people who have rental business. Now we go to, that was, however, to note, This is a keynote, guys. No allowable deductions are available taxpayer. There is no any allowable deduction to taxpayer. In short, you don't claim for your expenses. The taxpayer can't expenses in driving the income. You don't claim. The big note. Those are small things that are going to confuse you and you'll be off and you say the paper was hard.
Excuse me,
So those
sir.
class. Yes.
Is the threshold a constant?
The threshold is a constant.
Okay.
Now we look at taxation of business. You have these ones in your reader that I want to show you.
Excuse me, sir.
Yes.
Excuse me, sir.
Please, you talk.
Yes,
I'm
now
listening.
I just want to ask the essence of this. I just want to get to know the essence of this. Like, we can see the tax rate reduced from 20% to 12%. I remember you are easy in business. They can't allow to lose that money. So I just want to know why.
Is to encourage people to pay attempting unfairness.
Okay,
By the
sir.
way, before, this rent was paid by those people who had commercial buildings. Before, individuals who had commercial buildings and can be traced. But anyone now having any rental business, you now pay your blood. Okay. And it's a must. So if over time you can't pay and they get you, you are bound to face a penalty. So currently it's for everybody. That's why you need to raise tins, guys, or register, and you pay your taxes. Taxation of rental income from business. Okay, by business taxpayer.
Excuse me, sir.
You talk.
Sir, I'm still confused about the threshold. How do you determine the threshold?
Threshold, it's constant. You don't need to determine it. It's given to you.
It's
Not given to you.
2,820,000 for everywhere.
Yes.
That is
Oh, you
235,
annual.
but that is per month times 12. It will give it to you. You must get it in your head. No one is going to give you an exam, and you must know that it is done that way.
Okay. His
okay.
point.
Thank you.
Mr. Ugambiro, what's the difference between commercial buildings and rental buildings in this case?
Yes.
What's the difference between commercial buildings in business income and then this immovable property?
Allow me go to the second one. Maybe I will answer you. Taxation of rental income from business by business taxpayers. Now, guys, here we look at people who have apartments, who have buildings, and you are not an individual, but you are a business, you are a company. I hope you get me. Do you get me from the start? What we saw up was an individual, Nicholas, having his rental business. An individual, maybe Derek, having his own rental business. But now what we are looking at is a business, say a company like MTN having other rental business. A company like Pat, professional accountants having rental business. A company, a business like maybe
Jomai real estate.
Yes, Jomai having rental. Good. Now, how do we deal with it or outright? How do we tax it? I'm going to show you before and now. details. After that, you learn before, but guys, we're interested in what is current now. Before, and then now. So you're going to say, so before you had to get gross. After this, I'm going to give you an example, guys. Gross rental. Rental income. I'm going to assume the same amount, 200,000. Guys, 200 million, I mean, you have apartments, maybe in Munyonyo, you have apartments in Kololo, you have what, blah, blah, blah. You have in maybe Jomai, that is Seta, etc. And you earn your income from all those. You aggregate all total rental incomes from all those apartments. You add them and get gross income. Now on that gross income, you are allowed to less allowable. Remember, for companies, we say there are no allowable deductions. You are allowed to less allowable deductions. Guys, this allowable deduction is up to, you can claim up to, before it was 75%. They were allowing 75% of rental. Let me say of Y. When I say Y, guys, I mean the income, 75% of that income. Then, currently, they allow up to 50% of rental income. Up to 50% of rental income. Of gross, guys, it's gross rental income. Not chargeable. Gross rental income before you less allowable deduction. Then the net. Now here you get chargeable. Let me just copy this. You get chargeable income. Now on that chargeable income, you apply a rate. The principles don't change. Apply a rate, tax rate. And the rate is 30%. That has not changed. Equally 30%. Then you determine tax payable. So that's how it was done, and that's how it is done currently. So what I want you to check is that, do you see the allowable? The key thing is learning the allowable deductions. Yeah, that is the only learning, because the rate is the same. Business pay at 30%. The challenge, what is that allowable deductions, or what does it mean? Before they were claiming 75%, up to 75% of up to 75% of what? Of the gross income, and currently it is 50%. Let me try to confirm, but that's it, guys. After sense, that is guided in should be in section 6. Sure. Yes, here it is. I can read it for you. Rates for individuals. They are guided in part 5 of the third schedule. So now you go to the part 5 of the third schedule. Now, guys, you listen. They are saying for the purposes of section 6.2, the rate applicable is 30% of the chargeable income. So we apply 5% of the chargeable income. The rate is still the same. Spain, those allowable deductions was the 75% of the gross rental income. Currently, it is 50%. Guys, I'm going to give you an example now. Let me give you an example and then we close off that. It is there, summarized there, but I want to give you an example here. Please, if you can, please note it down, that example, for your revision purposes, and we will end on that example. ABC. Limited. ABC Limited has the following. Maybe can call them buildings. Which earns rental income. Has the following buildings, maybe say 4, there ended there ended 31st December 2021. But this rate is applicable in 2022. Now let me say, for their ending 31st December 2022. Okay. Let's say 2023. Why? Because the first 6 months, it was the previous one. So I want to show you the current one. So chances are we may test you for a month. So that, in actual sense, let me say for a month, because the whole year can't be tested here. For their end of 2022, below the details relating the month of July. Okay. 1. Buildings. Rental income. Then we have expenses. Expenses incurred. Okay, we have A, building A, B, have C, have D, or block D. And rental income from A, I'm going to say maybe we had 10 million. then from B had 25. Million. Then C, we had maybe 30. And D, maybe we had equal also 20. Then in terms of the expenses, we had maybe 5 million. Then here we had maybe 10. Then here we have maybe 12. And here we have equally maybe 5. Okay. Additional information. Hope you'll take pics so you are writing. Not one. Let me say one. The expenses above relate to repairs and maintenance. I don't know. Is an N. The month of July, except that relating block or building B, which includes some payments for the month August made in advance. Of 3 million. Not 2. Not 2, we can say additionally also ABC incurred security. Let me say advertisement or promotion costs. Is rent of business of shillings 5 million. Then finally, ABC, let me say, Nicholas, who runs the owner of ABC, ABC incurred 3 million. 3 million. 3 million as shares of his other buildings. These other buildings. Required. Compute. Compute the tax, the rental tax. Math of guys, what do we do? How do you go about that if you found that question? Yes, guys?
You start on it.
Yes? What do we need?
You need to first analyze whether it is rental income for business taxpayer or for individual.
Okay, good. I like that input. We need to understand, are we dealing with a business taxpayer or an individual? In this case, we have the business, it's a business, not so? Are we computing it for a business or an individual?
It's for business taxpayer.
Because it is ABC Limited, this is it's like a company.
It's like a company.
For business.
Yeah.
For business, and therefore let me specify rental tax. Let me say ABC rental tax. Now we are clear it is for a business, right? So what do we do next?
Get the total gross
Income.
rental.
Good. We get the total gross rental income. So I now determine rental income.
Buildings.
gross rental income. How do we get it?
The aggregate rental incomes for all buildings.
Let me start tables here. We need ABC Limited, chargeable income and tax payable. Chargeable. The month of July. We need the gross. You can have details. Then amount. So gross rental. What do we do? What is our gross rental income?
We get the total of
The
all
total, and the
buildings.
total is?
85
Yes.
million. 85 million.
85 million. So I would be having building A. And building A is how much? 10M. Then I have B. And B is 25. M. And I have C. And C is 30. M. And I have D. D is
20 million.
Guys, don't underestimate the workings, because sometimes we give the working. So if you added the total and you don't have it wrong, you have it wrong. So if you can, please do. So what is our amount? The total amount is said it's how much?
85 million.
85 million.
Let me call it gross rental. I've done it in Excel. Gross rental income, 85 million. 85. What do we do next?
We get the allowable deductions.
Allowable deductions.
50% of the gross rental income.
Allowable deduction. Uh-huh. 50% of what?
50%
gross rental income.
rental income.
You first total up all the. You first total up those gross expenses, the operating expenses.
Yeah. So it is.
When you total up, what do we get?
We get 32 million out of the gross
32.
the expenses. Yeah.
Total expenses are 32 million. Now somebody get me 50% of 85 million.
42.5.
42?
0.5.
42.5. So how much is our allowable deductions?
But Nicholas,
74.5.
Nicholas, I think the question says,
Answer me a question first. How much is our allowable deductions? I don't want to lose the point here. Please answer me first. Then you'll ask questions I can answer you.
74.5.
Yes? How much is allowable deductions?
74.5.
Why are you getting 74.5?
42,500,000.
I have different answers. One, somebody is giving
It's
me
42.5.
The other one said 75. 75 point what?
74.5.
Excuse me, sir.
5. Yes. Please
You
first give
said
me your answer.
you said don't we get 50, you said you get
42,500.
50% of 85. Me, I've got 42.5.
It is okay.
Yes,
That's what.
42.5.
Somebody give me 74.5. Someone else?
32.5.
32.5.
42,500,000.
42.5. Where do you get all those answers from?
Yeah, will not give me the answer.
10 million. This is 20.
5 plus 10, that is 15, plus 5, that is 20, plus 2, that is 32. Guys.
Nicholas, I think probably we have to less 3M because it was paid in August. And July.
100,000 that you
we less 3 million because it was paid. It's for the month of
because
August.
then the expenses
So
above
therefore your
relate
answer
to
is,
the repairs and maintenance.
your answer is how much? Okay, I like your input, but how much is your answer?
I think we take allowable deductions at 30 million.
30. I have another answer. 30 million. Okay. I think we can stop here. Now let me answer you guys. After that, we'll make it a day. So let's allowable deductions. Now, allowable deductions, I'll be having building A, we incurred how much?
5 million.
5 million. Building A, we have 5 million. Building B.
7 million.
B, is it 7 or 10?
It is
10 million.
7 million.
So you wrote 10 million.
It is 10 million.
Yes.
10 million.
It's going to be 10 million minus 3 million.
Because my answer is 19.5. If you 19.5.
10 million. And this gave us 7
million.
Guys, that 3 million is not for this month. Repayment. The paid expense is not included in that period you are looking at. And with that, I will not go back. And then we have to see.
Where are we getting
I beg your pardon. Did you say the 10 million is
now somebody's asking where are you getting 3? I said if you read incurred 3 million which was paid in advance regarding amounts for building B. B expenditure was 10, but it includes 3 million which was paid for advance. That. Then C. How much is C?
C is 12 million.
12 million.
12 million.
Then D.
5 million.
5 million. And then is it only that?
Yeah.
If I scroll up a little, let's scroll up.
Only that?
Scroll up, there's
Also,
something.
that promotion expense.
There's a promotional expense of 5.
Promotional costs 5 million.
Promotion expenses. They were relating to the building, not so?
Yeah.
They relate to the business, then they are relevant. They are 5 million. 3 million.
5.
5 million.
5 million. And now we get total what? Is it only that?
Yeah.
There was that 3 million Nicholas paid.
On other buildings.
Yes, on other buildings. How do we deal with it?
It's also relevant.
We don't record it.
Guys, that is for the person, not for the
That's
business.
for Nicholas, not ABC.
Okay.
Total expenses. What is the total?
22 million.
This is 24. Do we get 44?
No.
This is 20. I'm saying that is 12, 12 plus 12. That is 24, 24 plus 10. That is 34. Is it 34. True?
Yes.
Expenses.
7.
Total expenses is 34.
0.5.
34 million. So when we subtract 34 from 85 million,
Get 51.
Get
51 million.
1 million.
Minus 44. 34.
It's 34.
34. If I get 34, what is our
51.
We get 50. 51. Guys, the act allows you up to 50% of your gross income. So when you get 50% of gross income, what do you get?
25.5.
You guys get 50% of 85 million. What do you get?
0.5.
That's 42.5.
42.5.
That's 42.5.
42 million.
Now you listen here. Guys, you listen. Are you listening?
We are listening.
And I'm not going back to rental income.
And I'm not going back to rental income.
Out of that 85, the 50% of 85, you get 42.5. The act allows up to 50%, which is 42.5. But we take whichever is the lesser. What you actually incurred and the 50% of the gross income, whichever is the lesser. So the lesser is 34. This is going to be the allowable deductions. What is our chargeable income? Chargeable income is what? You get 51. Now on this, we apply a rate, tax rate.
51. It's 51.
Rate at 30%. What do we get as our tax? That times 30%.
$15.3. $15.3.
That is the tax payable. I'm going to assume, I'm assuming, guys, now, what if these deductions, these deductions were 55 million? How much would be allowable deductions?
42.5.
Good. It will be 42.5.
So please slide up. I want to say something.
As you've understood, I'm going away.
Yes.
No, first slide up.
You can go slide you have understood.
I lay up.
There.
Uh-huh.
There is something that I've not understood.
Which one?
Please, not 3.
Uh-huh.
They have said Nicholas, the owner of ABC, incurred 3 million as repairs of other buildings.
Yes.
They're not showing that it was personal.
Of other buildings. They are not of the owner. These are other buildings, not necessarily ABC. There are other buildings. Here they have said ABC has 4 buildings. ABC and
Okay, thank you.
I now ask you another question.
You're asking for
I'm changing this. Nicholas has the following buildings: ABC, all that, and he incurred the following. I'm removing only note 3. Determine the rental income and chargeable. What do you do? This is for rental income.
No, that's for individual.
For the month of July 2022. What do we do?
The rate change.
So we have what?
Sir.
Yeah, like a two don't change. That's how they will not allow.
Income.
Yeah, we don't. We include the threshold.
We start with gross what? Gross rental income, and we saw it is 85 what?
Million.
5 million. Less. And the threshold is what? For the month of July, is 235. What do you get? I'm getting
84,765,000 as chargeable income.
Chargeable income goes to 84.
765,000.
5,000. Now on that, we apply a rate, tax rate, and the rate is 12%. What is the tax payable?
Excuse me, sir.
First, give me the tax payable before you ask your question.
It is 10,171,800.
Sure.
17,1800.
800.
Guys, that's how we tax individuals. I hope you've understood very well. And that's how we deal with companies.
Thank you so much for watching. Make sure you subscribe to the channel.